Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
If you're interested in multifamily real estate but don't know how or where to begin, our guide on how to start investing in multifamily real estate breaks down everything you need to know about identifying good investments plus real-world examples. Download your copy in the show notes or visit lifebridgecapital.com/start now to start your journey in multifamily real estate. This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Tejas Gosai. Tejas has over 20 years of real estate experience, including real estate development, property management, and commercial finance. He has an interesting story. He talks about how he went to law school, but then ultimately partnered with his father. They had some complementary skill sets that made a pretty amazing partnership for them to start developing some commercial properties. But he wanted to keep a legacy alive through real estate. He talks about some different ways he's done that, but then also goes into some different ways to operate a fund. Just about data that he likes, about Reg D private equity fund, and even some acquisition stuff inside of a fund that maybe you should be aware about. But just the acquisition process in general, criteria, metrics that he uses for a deal, and then just the data in general, some different aspects, different software even that he uses to find and operate deals. But he has a focus on creating generational wealth for his investors. He's opened and operated over a dozen major hotels, gas stations, multifamily assets, and developed retail strip malls totaling over $75 million in real estate holdings. So combining his experiences, he created one of the fastest growing commercial real estate firms, especially focused on Allentown, Bethlehem, and Easton markets. So I hope you enjoy the show. Tejas, welcome to the show. Give the listeners a little more about your background, really how you got to your journey in syndication, where you're at now.
Sure. And thank you again so much for being here. So I love real estate. It's been a long journey. I was bred for real estate. My father's a physician with the immigrant story, came here with $10 in his pocket. And, over time, he really showed me and taught me what is possible. After graduating law school, I spent a lot of time building hotels, gas stations, retail, even convenience stores. We built a compressed natural gas refueling station. I had a really good early 20s, but everything revolved around creating generational wealth and keeping legacy alive through real estate investing. In my second life, now that I have my real estate license and we're on the commercial real estate side, it's been really, really fun. And of course, we're going to talk about this private equity fund that we got off the ground that kind of has been my goal for the past 20 years. So long history, a lot of crazy deals, a lot of fun stuff, but very high end when it comes to trust level of, I would say, limited level of risk in what we're investing in. So I could go on, but thanks for that. Yeah.
So you graduated law school and then you started developing commercial real estate. Is that correct?
Yeah. So I knew that I actually went to law school as like a finishing school. I was really young when I graduated college, and I focused on real estate mainly just to hear and understand what people, made mistakes on and how I could protect my family in the future. That was the primary goal. And then right out of law school, I helped my father build his first hotel, and it was a good family project, but that really spearheaded, I had to tell my father, I'm like, hey, there's other ways to use your money rather than doing every single massive real estate project yourself. Why don't we look at talking to investors and folks? And, he had never done that before. So using my law degree and his medical background and then everything that he's been doing, it was neat to kind of marry things up to be able to syndicate. I didn't have a coach or a teacher. I just had to kind of put it together myself. And so I figured we might as well start with $10 million projects and see how it goes.
No, that's awesome. It's great. Amazing partnership there too, father and son that had those skill sets, to make it happen. Love that. And so you mentioned also like wanting to keep that legacy alive and through real estate, and what was driving that, and what are some tips maybe for the listener as well to keep legacy alive through real estate like you've done?
Yeah, so it's kind of funny, the whole legacy is alive concept. It's been going on for years and years, and there's a lot of folks that over decades now have passed their tax basis, through death or an exit event to their children. And so when I was studying a lot of this stuff in law school, my goal was really, learn how the mechanics of how you can create generational wealth, rather than just, I'm going to go do a big project and this is going to last for 20 or 30 or 40 years. So, really looking at how the return works, what the risk is, what the investors are comfortable with. Being the GP on a project, you don't sleep as well as at night because you have to burden the storm for your limited partners. So I kind of forgot what the question was, but
we were just talking about, some tips for creating that generational wealth like you have, and just helping think through that. You even mentioned there, like the mechanics of how to do that. Any, one or two tips that you would say, hey, this is what I took into consideration, or this is what we did to really think through creating generational wealth.
Yeah. So sorry. Yeah, you're right. Let me go back to that. So being an immigrant and, creating businesses for the first time, you really want them to continue to your family. And some of that doesn't take place today because kids don't want to do what their, family businesses. And so my biggest tip is, my goal was to build a foundation of trust, and then to be able to be the answer guy for when somebody who is in a wealthy position needs to either create passive income or active income. And those are the only two ways that you can kind of function in real estate. So, understanding the mechanics and then knowing what you're doing, not just to tell your investors what they're doing, but to really, like, in your heart, know that what you're doing is going to, make them money over time. You're going to be a good business partner. You're not doing anything shifty. I think if you really start with your core on those items, you'll be successful later on. Projects may fail, but you'll still be honorable. Projects may succeed. Partners might get upset, but at least you've always been forward about things. So I think just the mentality of syndication and being somebody that functions and creates the space. A lot of people don't mention how you just got to have your act together before you start, or things just go downhill.
No, that's very wise words there. Have your act together before you get started, right? Be integrous, all those things, no doubt about it. Well, now you've been in this business for a good while. You've done lots of different things, from development and law school to development and syndicating and now operating a fund. Well, let's jump into just the topic around a fund a little bit. I know that topic alone is becoming so popular in our space. So many more people are trying to start funds and doing funds as opposed to, say, a single asset, syndication. Why don't you just start with a little bit, why a fund now? Why not just a single asset syndication? Why have you all moved, in that direction?
Sure. Love it. Thank you for the setup there. So, I guess we're talking about my progression in my career. The beginning of my career in development was mainly data and figuring out data metrics and what to do. And at that time, we were pooling 3, 4, 5 people per hotel, roughly $5 million per hotel. They had 25% loan to value. So, I did everything in kind of these microcosms. And then I am now in the Lehigh Valley market, which is just over the New Jersey border in Eastern Pennsylvania. It's a rising market, beautiful place. I moved here because my wife is from here, so I didn't have a choice. But when I restarted out here, I got my real estate license, and all I did was hunt inventory. And I said data a few times here, but I'm a big data junkie, looking at feasibility studies and economic development data and demographics. And so being being in this market, being in a rising market, and as a real estate agent, calling half of the people in my community, begging them for a listing, or begging them for a listing meeting so I can tell them about our media company, what we're doing. We've been focused strategically on finding the listings, and then we call this farm to table. We're passing those real estate opportunities on to investors that can't find a property online. There's too much competition. They don't have an opportunity to see the property. So, a big piece of the problems in real estate is that inventory doesn't make it to an individual or a group of syndicators. It's actually a root problem because, everybody, and Whitney, I know you deal with this constantly. It's like, how do I get my next deal?
Right.
Who do I
That's what everybody's dealing with right now.
Yeah. And that has, it's actually always been an issue,
right,
to get the inventory. So that was my hard line focused. I spent more money than anyone would in this market to acquire the inventory. And we did really well. We were helping investors, I'm 99% commercial. So all of our investors, folks looking for a 4-unit, 7-unit, 10-unit, people syndicating for deals, we were the guys to provide that inventory, keep a good relationship. And we did a lot of it off market as well. I don't know if you've talked too much about those topics, but a lot of people don't want to buy online, and we were the folks that would provide that inventory off market. Well, sorry for the long-winded conclusion. A lot of those clients that we've been working with for years, and I've been developing with for years, they've kind of asked me, "Hey, do you have a crowdfunding ability here, or is there a way we can syndicate smaller deals?" And so over the past few years, it's taken 2.5 years to get this Regulation D private equity fund off the ground. It's been intense. It's the hardest thing I've ever done in my life. It is incredibly restrictive. It's even more difficult to find a property with our fund. But we kind of cracked the code there. There's a lot of people. It's a $50,000 minimum investment. We just closed our first round. And we have a lot of folks. The goal is to do what we've been doing for years, take investors' capital, put it into properties. They make a return. It's more on the passive side. So this has been my life's goal. Sorry for the long-winded.
Yeah. So I guess why a fund like this versus maybe another kind of fund or a single asset, syndication? Sure.
So our fund is called the Lehigh Valley Private Equity Fund. So we're literally regional. Currently, we're a regional fund, but the opportunities are in our market, and our market is one of the fastest rising markets. So it's kind of a right place, right time, right build. And the reason this fund, specifically a Regulation D fund with the lending side and the acquisition side to combine lending in real estate and obviously owning properties, it goes right back to the inventory. We can create these 8% preferred returns with a 12 to 18% target here in this market. Everyone all over the country is looking for that double-digit return. We can do it here with this Regulation D fund. So it's the only requirement is that we have to have accredited investors, which just means that you have to be wealthy or make over a certain amount of money.
So you all, it sounds like you've had this machine where you can find deals. You've had this team where you all have been good at finding deals and acquiring deals, and spent, like you mentioned, you all have spent a lot of money to figure out to acquire deals, right? To find them, to market, all those things. And now, why not buy some of them, right?
Exactly.
And provide this return, to your investors and others, and So, what's the difference, say, in the acquisition process between, say, operating a fund like this versus buying a single deal, by itself?
Sure. A lot more restrictive with a private equity fund. When you're looking at an individual, let's say multifamily or a fix and flip, it's really just you on the hook. You might be a little bit comfortable with some CapEx or charging less for management, maybe just saying, I'll scrap the management 5% on that deal and vacancy. And I feel like there's a little bit more risk tolerance when it's an individual or a couple folks looking at a property, and they might buy it around a 8% cap rate or 10%. They might stretch a little bit more because they have good financing. For the private equity fund, it's like you're looking for the needle of the needle of the needle in a haystack. And so for us, we have to look at, hundreds of projects to be able to fit the criteria and metrics that we are for our investors. And, Whitney, I'm like, man, maybe I shouldn't have started a fund. It's way harder than I thought it would be. But that's kind of the fun part. I'm in a new level where I'm looking at properties kind of all over the place in different parameters. We're looking at different classes. We're looking at the different communities to see if there's a bigger upturn.
Would you put different asset classes or different, in the same fund, or different communities in the same fund? How do you see that or think through that?
Yeah, definitely. With my hotel experience and, with COVID, it's not the best space to go and buy hotels, things like that. But we have a lot of self-storage around here, warehouse space, things like that. I'm being a little bit regional.
Sure. You mentioned like criteria metrics for a deal also in the fund. Could you just elaborate on any of those?
Sure. So we have an 8% preferred return. That's kind of our, bottom return. And it's a 12 to 18% target. So, the difficulty really is buying it at the right price, hunting it out and then being able to move quickly. And whether it's a fix and flip, or let's say a multifamily that's a 10 unit, we have to get in there, get out of there in a short period of time. So, some of the larger asset classes are a little bit tough to navigate right now, but the smaller asset classes are very lucrative. There's a lot more people buying real estate for themselves individually or with a few folks. But there's a big shift going on. It's just a crazy world since COVID. So it's fun to see it and then keep analyzing when you don't want to. And it's good to have a chief investment officer and a lot of colleagues to bounce things off of, because you don't really have you have enough confidence to do the deal, but you want to feel good. It's tough to just feel good all the time in real estate.
For sure. Well, you mentioned about your background in data and, finding data. Any tips on where you find the best data and maybe hey, man, if you're going to buy deals, you need to know these things and this is where you find it.
I'll share my whole world really quickly for the listener. So I started out as a Mojo. I use Mojo Cells. One of the best triple line dialers. That was my first year in this business. I would call thousands of people every year using Mojo. That's just one software that allows you to dial, but it also has scrubbed lists. It skip traces data. And I bring this up because it's actually, this sounds like kind of a rude comment, but it is so easy to find inventory with the softwares available nowadays than it was 10, 15 years ago. If you're willing to do the mundane, boring work, everything's there. So Mojo, there's My REI Pro. There's, sorry, I'm just running a blank. Intellius.com. There's so many different service providers for you to get the owner. And we're typically going for commercial folks, not single family residential. I know there's a lot of folks in the wholesale world and, different parts of the syndication spectrum, but you can get a hold of those owners. And if you have a decent pitch and you're willing to get rejected a lot of times, then you can get a meeting with those folks. And that's literally how we built our business. So there's just a couple softwares that you can use, but just a simple Google search. And that's how I learned scripts. I learned from YouTube. And I'm talking me personally out of law school, trying to learn how to talk to people. So I think with the data part of it, it's available, it's there, you can call it. The systems are more different now than they've ever been. It's just, you got to do it. And it's not hard to take over a market if you set your mind to it, or a town or
yeah, tech. If you don't have tech in your business now, you're going to be way behind, right? It's just some tips like that. It's very useful. It just helps you think, or the listener, to think about different softwares that could help them to scale a lot faster or to make a lot more calls, right, than they were. And you mentioned you get ready to be told no. Yeah, you got to be ready to accept no many, many times before you get to a yes, potentially. What's been the hardest part of moving to the fund model or accomplishing starting a fund?
So this is, when I say new for me now, it's been a few years. starting a fund is just an unforgiving task. We raced to get our fund off the ground last year, and we got it off the ground in February, right as COVID hit. So it was a couple of years of work to have to basically stop for an entire year. There is a lot of legal concerns, issues, liability, risks when you're in the private equity fund space. And it is incredibly educational. When I was just, somebody who syndicated deals and I'm like, I'm going to start a fund. This seems like a good idea. It really did seem like a good idea. And then you get into the difficulty of starting at the legal costs, the restrictive parameters on marketing, the difficulty in finding the deal for your criteria. It's a commitment. So if you're going to do something like this, make sure you're ready to go on the ride for 5-10 years. And at the end of it, though, it's fun. It's a new industry for me. It's incredibly restrictive, but I feel like that puts some good parameters on me. We can only do our job for the investors, best intentions of the investor. So there's a lot of different ways to function in the real estate world. Private equity is probably the new frontier for the next many years, with banks being very difficult to navigate with right now, and with the Biden administration regulations changing. So there's a lot out there.
What would you, now that you've started the fund, anything that now that you think you would do different, say on the next fund, just from what you've learned now?
Yeah. So making any company a Swiss Army knife is really difficult. But I learned that in real estate, in our commercial real estate business, we kept on having to be the people that helped with 1031 exchanging. And we kept having to be the ones that explained how this specific tax, code functioned with how your real estate works. And over time, we just kind of, we became experts in at least finding the experts and getting the folks together. So with any of these businesses, with the private equity fund world, whether you have a wholesale business, whether you're syndicating, whether you're doing hotels, things like that, you really just have to have way more in your suite than you expected. So over education, and then testing friends and family and questions and answering, like building your FAQs and things like that. It's really just a big data hunt. And then you have to go to market. And it's daunting for anything. Like if you're starting a pizza shop, it's really tough to get everything right, and the ingredients and the register. And when you get into a flow and then you see the established businesses, they can really navigate and turn on a dime. I think that is the most important thing in the syndication space. People who you're working with in the private equity space, and when you're a real estate agent, people who you're working with, they expect you to know the answer, even if you're not an accountant. And when you say, I'm not an accountant, you have to go find an accountant, or I'm not a lawyer, you have to go find a lawyer. They still trust you, and they want to know from you. And, you have to keep disclosing that this is just, this is what you're saying, and keep pushing them to an attorney. But people really trust you. And especially after you've made them some money, then they trust you more. So you just have to have a stronger periphery.
How do you personally, or when operating fund, either way, prepare for a downturn?
Being paranoid. That is the biggest thing I can tell you. Like, even every single day, I think, is today the day that there's going to be one of our metrics that turns into something that's a snowball down the road. I luckily have survived a couple downturns, and having the indication, and then having more fear in your mind than the people you're working with and the advisors that you have, has been really, really beneficial for me. I think when it's good, people ignore the data. And my philosophy has been, like, if it's good, like, the data is the only thing that's going to save you from what's coming up next. So I think preparing for no one's ever prepared for a downturn, but I think, these bigger companies and a lot of folks, all they do is keep a closer ear to the ground And when you notice something, you just kind of got to be, I'm always in like a state of constant fear, like happiness and constant fear. But it works. It's actually helped out. And cyclical, like everything is cyclical. Everyone knows that. But, every year now for us as a real estate agency, we have a downturn every winter. So we double down on the marketing in the second quarter or the third quarter of each year, so that we have a really good fourth and first quarter of next year. And we're looking at those metrics and things like that as well. So paranoia goes a long way, and make sure your data is validated.
Yeah, that's a good one too. Make sure you know where your data come from, right? And you're watching the data. Like you said, people ignore it when things are going great, and that's so true. What about any predictions for the next, say, 6 to 12 months in the real estate market? Anything you're expecting? I know no one has a crystal ball, but just anything you're preparing for or expectations?
Happy you asked me that. My favorite quote is, in chaos, there are ladders. So everything is nuts right now. You're hearing, stock market and everything that's happened recently has taken real estate investors away from real estate and put them into the stock market. There's a lot of people from the stock market that want to go into real estate. COVID concerns, everything. This sounds weird to say, but there's just a lot of opportunity in this chaos. And nobody wants chaos, but we've been stuck with it for almost an entire year and a half now. But people are still raising money. People are still doing deals. People are still doing 4-unit syndication deals. They're doing massive deals. Private equity has had the largest uptick in investment in the past few years because of all of this that's happening. So, piece of advice, just like in your gut, like everyone is still in this weird place where they are still reinventing themselves to some degree, or they're testing out their hypothesis from last year and they're still kind of surviving. So just, stick to your guns and make sure you have a good network. You look at yourself in the mirror, you enjoy your data, you're really helping folks. It's not hard. If you're helping folks and you're being truthful, you're going to do a good job in whatever business it is. But right now we're nowhere near a stabilization on anything. It's like you can have your predictions and your metrics, and those might go away in 30, 40, 60 days. But I can tell you, it's still going to be chaos for another 6 months, maybe a year. Of course, some sectors are doing well, some sectors are having difficulty, but everything's turning on a dime. Like there could be a new stock or some weird company tomorrow, that starts getting attention. So I don't know if I answered that. I don't have a prediction. I just think the prediction is that you will be able to function if you know that there's chaos. It's like if you just know there's chaos, then hey, be prepared for it, right? We have been kind of in a constant state of chaos, it seemed, for well over a year now. Well, Taja, what about any daily habits that you have that have helped you achieve success? Sure. Thanks for that. Yes, I am a short order chef for my 6 and 8-year-old boys every morning at like 6 a.m. I spend a lot of time with my kids in the morning, 6 to 8 o'clock, and then I put them to bed at night. But I work 7 days a week. I'm very consistent in my schedule. I think family is really important. It makes you work harder. You want to put in the extra hours in work, so you have an extra 2 hours with your kids on the weekend and things like that. So yeah, I'm a big stickler to regiment. Practice makes perfect, and hang out with your kids when you get a break. You don't have to go to the bar.
What's your best source for meeting new investors?
The internet, Crexy, actually. Have you heard of Crexy?
No, what is that?
Crexy.com. It's basically replacing LoopNet to some degree. It's just a wonderful resource. We have a lot of our listings on there, and because it's kind of it's been around for a couple of years, we have like hundreds of people that communicate with us on Crexy. We have like 50 million listed, but the internet, Facebook, we spend a few $1,000s a month on Facebook. We do a lot of LinkedIn. So we have a podcast as well. So we're just really active in just getting to people, emailing, texting.
What's the number one thing that's contributed to your success?
Fear. like for me, I like to be right, and I like to be calculated, and I work with a lot of not difficult, just very astute, smart folks that are over 60 and 70 years old. And I really don't want to be the guy that doesn't have the answer, or, can't find the answer, or is too embarrassed to admit that he doesn't have the answer, and fear of a downturn. So, I'm always in this, like, can I make sure here? I'll tell you one thing real quick. I have actually, in my early 20s, I had a real estate venture that did not go well. And it was luckily one of my first real estate ventures that just didn't go well. And people lost money. I lost money. My investors lost a little bit of money. I couldn't sleep. I was literally like, I was just in a depression, and it wasn't even a ton of money. We were all okay. But that happening when I was around 22 years old, I just won't make the move if there's going to be a bad run on the other side, or if it's just not the right gut feeling, I just will stop. And it's really because I'm like, I hope people have a setback when they're in their early 20s and fail miserably, or they get their heart broken by a woman. Like, I don't want those types of things to happen, but those things happening in your early 20s sets the stage for you for later. And so that's a lot of my, my success is in limiting fear, I guess.
Gut check a little bit, right?
Yeah, definitely.
How do you like to give back?
We do a lot of fun donations, and then we promote them. So we actually just helped the Allentown Police Department buy 2 canines. And they're $14,000 dogs, and we help with the fundraiser. We contributed a large amount. We have a couple charities that we contribute to. One is Troops, or Homes for the Troops, which is a big one locally. They're all real estate related to some degree, or pets, but we try to give back that way, volunteer here.
Nice. Well, Tejas, I'm grateful to meet you and just hear more about your story, and even coming out of law school and getting into development, and even the partnership with your father, which I think is pretty amazing. Just those unique skill sets and being able to make it happen. And you talked about data and just acquisition side and operating a fund, even different softwares you all have used to be able to find deals and really go after it in a big way. I think, making all those calls and not just making one call at a time, but figuring out ways to be extremely productive and creating more deal flow. And then just numerous aspects, but grateful for your time. Tell the listeners how they can get in touch with you and learn more about you.
Sure. Super easy. www.lvpefund.com. That's Lehigh Valley Private Equity Fund.com. I'm also really easy to Google search. My name is Tejas Gosai. All my information's out there. My phone number is 215-317-1177.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.